The Philippines is a dividend investor's paradise. Now I know I've made countless videos talking about why dividends are so important in your long-term gains and why dividend investing is the best strategy to use here in the Philippines. I've repeated this statement again and again, and you guys must be thinking, why the same thing again? Well, if you've watched videos or read books of Warren Buffett, Peter Lynch, Charlie Munger, and even if you go back to the mentor of Warren Buffett, Benjamin Graham, which I know most of my viewers weren't even born during that time, one thing in common is they've kept on repeating the same strategies, the same mentality, mindset, and ways on how you need to approach the market. It has been like that for more than a century now, because in the stock market, it's what works. There is no new magic formula every week or month. You just need to repeat the same strategy over and over again for a long period. Let's face it, investing is boring, and that is how it's supposed to be. A lot of investors lose money in stocks because they can't do these strategies consistently. They think they have to find a new formula because they don't have the discipline to sit still and wait. So what does this connect to dividend investing? Because the strategy that I use is dividend value investing. It's just value investing itself, but it's more concentrated on finding good companies with good dividend payout. Value investing is what the great investors I've mentioned earlier have used, and it has worked for centuries now. Because in stocks, you have to look at it like you're an owner of the companies you will invest in. Of course, by thinking like an owner, you want the companies you have to be strong and can continue to grow in the years to come. You want to find value in what you're investing in. But here's the thing, it isn't that easy to find the right company that would fit that criteria. Such as for me, companies that pay good dividends, plus should have strong financials and is trading at a discount. So this is where we go back to what I mentioned. The Philippines is a dividend investor's paradise. In the Philippines, our market has been trading sideways for a long time. I know you might think there must be some kind of reason. Yes, there are politics involved, conflicts surrounding us, but those things are noise for us long-term investors because those are things we can't control. But what we can control is choosing the right companies. Companies you know will stay strong even in conflict times. And in the Philippines, we have a lot of those companies. Companies in the PSCI have now reached record earnings. This means we have surpassed pre-pandemic numbers. But if you look, even though companies have recovered, the market cap is going down. Because as we know in stocks, a lot of investors don't look at fundamentals. They like to invest based on hype, popularity, or to simply put it, they only look at the stock price. They don't look at it like an owner does. If they see the price going up, it's a good company. But if it's going down, it's a bad company. If you search for dividend companies that have more than 3% dividend yield, we have a ton of it. And if you take a closer look at the details of the company, these aren't just some random companies. These are strong companies. Big companies here in the Philippines that have good financials like revenue. Earnings are growing consistently. Debts are managed well. Dividend payments have historically grown. And if you look at price valuation, it is very cheap right now. A lot of these companies are even blue chip ones. This means they are part of the 30 components on our main index. They are the 30 largest in our country, and some are in the mid-cap index and in the dividend index itself. Just compared to other countries, if you watch videos of other dividend investors on YouTube, they are settling on yields below 2% because their market is already high. It will be hard to find great companies that pay a good amount of dividends consistently with good financials and are trading at a discount. But here in the Philippines, you can find it everywhere. And remember, we are a growing economy, which means we still have a lot of room for growth. And the big companies that drive that growth are trading at a cheap price right now. Now, before I go on to my next point, I've mentioned a couple of times that the companies you should invest in should be strong, have a good growth history, well-handled debt, and is trading at a fair price. But for a beginner investor, how would you be able to know this? Where will you find the data for it? Well, look no further, because Simply Wall Street has your back. They have countless of data for you, not only for local stocks, but if you're also investing in other countries, then they have it for you as well. They have graphs, comparisons, and all the data you need to determine if this company would fit your criteria. And there's more, they also have a watch list. That way you can easily be updated when your stocks release their earnings, when insiders are buying, and when the stock falls below your computed buy price. This helped me a lot in my investing journey. And speaking of buy price, if you don't know how to compute it, then they have it for you as well. and let you choose two options, the ones analysts computed or discounted cash flow. They also have a portfolio tracker that gives you the overall health of your portfolio, detailed returns, dividends, diversification, and a lot more. So if you want to try it out, they offer their basic plan forever free, and if you do want to avail their paid plan, then by using my link, you can get up to 40% discount. So what are you waiting for? Try out Simply Wall Street. Now back to the video. Back then, since I started before the pandemic, I had a hard time finding good companies that have good dividend payout because the market was so high. Our index was in the 8,000 level during that time, so I can really compare the ease of finding dividend stocks from back then to now. And here's the best part, our market has had a history of trading sideways for a long time. It has happened 2 times, which I showed in my portfolio update. Now you may be wondering, how is this a good thing? Well, I'll make myself an example. My goal in stocks is to retire off of my dividends while still growing in the process. This means my dividends can provide all my living expenses and still have left to be reinvested to continue growing in the future. So with this, I have no plans to sell my stocks at all. I am willing to hold it for more than 10 or even 20 years, if possible, even forever. Just imagine, if the stock price of these great dividend companies rises so fast, how would I be able to invest more money into it? Yes, there's that joy of saying, hey, I have good returns, my portfolio is all green right away. But in the long term, isn't it more beneficial if I could have invested more money? This means I get a higher dividend yield for the price I'm buying those companies right now before the market rises. This would give me more returns in the future, both capital and dividends. And the Philippine stock market is giving us that opportunity. Back then I was thinking I would be happy if I could invest $1 million before the market rise again. But now I've already invested more than that, and it's still giving me a chance to add more. My dividends have exponentially grown because of this. My monthly dividend income can now be compared to someone who has a rental condo. This is without the stress of looking for a tenant, paying the monthly fees, paying renovations, and the best part of it, every dividend I get, I can easily reinvest to earn more money. Unlike for having a property, you can't easily reinvest it. You have to build up a large capital first, but for stocks, every cent is easily reinvested every month, allowing me to take advantage of compounding interest. So before complaining that our market is lagging behind other countries, think first, what is your goal? If your goal in stocks is to be able to finance your retirement, then the stock market trading sideways for a long time would be beneficial for you, since you're relying on your monthly income to add money to it. I think of it this way, while I'm waiting for my stocks to go up, I'm still earning dividends. I'm earning while waiting. It's a win-win situation for me. But if you don't have the discipline to wait and sit still, then the stock market isn't for you. I see a lot of people go into investing, then since they can't wait that long, they try day trading. They then lose a lot of money making them quit stocks. Then eventually they blame themselves for not sticking to long-term investing, while some blame themselves for not starting early. That's why in stocks, always remember, it is not a sprint, it's a marathon. You have to have the right mindset to stay in the game for a long time. Yes, it helps if you know more about how to analyze stocks, but eventually, what's really important is to have the discipline and temperament to stay in the game. Don't compare yourself to other investors, especially those you see online. It's easy to fake your returns. They may show you all the good trades they have, but not the bad ones. What I do, I compare my portfolio to the performance of the index. Just track the index monthly from where you started investing. That's my only comparison, not other investors. Take out the noise as much as you can. Don't just listen to news or what analysts say. Do your homework and look at what's really going on in the companies you have. That's how you can control your emotions easily and stay in the game for a long time. With that, I hope you've learned something from this video, and if you did and still haven't clicked the like button, then do so before leaving. Thank you and see you in the next video.